The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. I'm looking at the S&Ps right now just to get right into it. We've rallied up into some serious points here of contention, namely that former unfair high on the weekly, which was around 2075.20, and got a POC in the current weekly profile around 2081. So a little bit of a DMZ of resistance up there, but we've got a new profile on our daily. Here it is, folks. This is all in the scanner. And the unfair low right now is 2064.30. So if, this is a big if, and we may just kind of consolidate around here a little bit because this type of move up, very unexpected to me, actually, with all the overhanging fundamental what ifs out there. Getting back down below 2064.30, which is the new daily unfair low print or level, if you will, and then this is our unfair high on our 240. So I've thrown out so many numbers here, so many what if scenarios. How can I be wrong? Just kidding. Top of that profile is 2064 on the 240, and then you've got the 2064 on the daily. So have we hit some major resistance up top relative to our weekly numbers? In my opinion, yes, finally. Have I gotten stopped out of this trade? I've actually got stopped out of this S&P trade twice going back up. That's okay. That's part of the game. I was talking to somebody this morning about, how frustrating it is sometimes to get stopped out. But again, there's so many mental things in play for me, and I'm sure a lot of folks out there, when you get stopped out, you try to get things back quick. Sometimes that's not, again, this is getting stopped out is a part of the game. And I like to keep, here's something that we're doing here for my own personal trading is I had the programmers do this. I keep a kind of a running total of what's going on. I look at the percentages of how many times I'm personally right, what the risk reward ratio is calculated all the time. And whenever I get frustrated, I kind of look back and I say, you know what? I'm following the plan. It's a part of the game or a part of the process. I shouldn't say game. And if I'm right over 40% of the time, 45% of the time, that's what I kind of generally have kind of, done the studies on with the automation, blah, blah, blah. My risk rewards 1.7 or higher. I just try to go back and just look at the numbers and say, you know what? I'm on the right track. Don't get frustrated, things like that. And, most of the battles that I do pick, just letting you know from a personal standpoint, are based around profiles and whether it's okay to be long, okay to be short, or okay to be long, not okay to be short, and vice versa. And a lot of times, in another account, so I don't get things confused, I've got a long-term position, not necessarily always restricted to underlying instruments. As I was talking to David yesterday he was doing Tom's show. I don't know if you guys caught that. Sometimes you want to, in a whole nother venue, do long-term hedged scenarios, and that way the hedge is kind of the stop. And we talked about that yesterday afternoon on the euro for a long-term short within the money calls purchased. And that way it can do what it wants to. It can go up. I personally think, and again, this is not a hunch. Technically, it looks relatively sound to do this. On the euro, to go back and visit those lows that were I mean, the euro hasn't bounced like it should have relative to, hey, all the fears are over. So I think we can ultimately, fundamentally and technically, with reasons, go back and visit those unfair lows. Excuse me, at least the unfair lows on the, let me pull this up so you can see it. The unfair lows on the profiles. Here's the euro, here's the currency. Let me wait for this to come up here. Here we go. Okay, so here's that wishful thinking situation around 109 down here. So we got up to the POC, we backed off. On my day trading account, I actually got stopped out of this because I can't take too much heat on that one. But the long-term scenario on this one, I feel relatively good about this. With a hedge on in-the-money calls, you're looking for a larger move when you do things like that. But again, with this, if this euro pulls back, like I think it will, those calls may hold their value just because of a volatility increase. But again, that's a whole nother trading plan. All righty, let me read the den here and see what's going on. If you guys have any questions about anything that I say or want to lament at all, just throw it out there. All right, taking a look at the British pound. We've got a new profile attempting to appear now. For a long time, since the Brexit happened, we just haven't had anything to hang on to down here. Here's our weekly, here's our daily. Now you're seeing that we finally will have new daily profile inflection points, which are my favorite profiles. A lot of our automated trading systems that we work on are based around triggering around those daily inflection points. They're very, very powerful. In this case, I think you kind of have a regulator of the trade down still. Again, I think the British pound has found its current value. It is what it is. There's the bids and offers. It doesn't have to go any way you think it's going to go. Here's where the market is. But we're going to have some envelopes here at least to play ranges, bare minimum, and understand where breakouts or breakdowns will happen. And now for me, at this stage, this is a waiting game, and I'm licking my chops trying to wait for these new inflection points on the daily. Looking at the end. All right, so, I'm expecting this to actually go higher. So, again, you don't have anything to lean on here. We've got some inflection points in the past at 101.33 that we've talked about edging up off of that. I think we can get back up into the 105.5 area. But, again, there's nothing to really lean on here except some numbers that we talked about. I would suggest, because this thing's probably going to be a wild beast for a while. Not interested in shorting this thing. Just trading a little lighter and trying to let this thing develop. Aussie dollar, same situation as we've had. Kind of edging up into this 78.81. Nothing really to lean on that one either. We're going to be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I apologize. Yesterday kind of went off probably in an area I shouldn't have. After that Turkish new attack, our Attorney General, when she says things like we should be tolerant, blah, 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 it just gets on my nerves. And I was just kind of making light of another, flip the coin to the other side and asking others to be tolerant. So if I offended anyone, I apologize. But, I still, to some degree, think that might be in order. But anyway, here we go. Let's take a look at the notes. Okay, so again, you don't want to be short these things, in my opinion. We've been talking about that with a move in the S&Ps like they've done, and this thing backing into maximum support there. I got stopped out of a little bit higher support, but this is kind of the line in the sand here for the notes, and you've got a lot of things in your favor on the long side on this one. So when you get near big time inflection points on the notes, I think you got to take a shot on the long side. That 132.11, we reached 132.14 this morning. That's in the neighborhood, and we bounced about 10 or 11 points, or 10, 11 ticks, full ticks on the 10-year. So this pattern, still looking flaggish, pennant-ish, if you will, on the notes, and I love how this thing's acting. You got, again, so many things in your favor for these things not to cave in. I mean, there's not an intermarket spreading, easy trade out there with other rates in the world, but you've got so many things in your favor here to not buy or to not short the notes, put it that way. Jay, that Ralph's comment, it just never gets old. It doesn't. I laugh every time you say it. Anyway, taking a look at gold, this one, not a lot, got such a big profile here on the 240 even. I mean, look at this thing. When we hit and by the way, this is a great example too, to be able to use POCs in wide profiles. If you'll see how that acted 2 days ago, about a day and a half ago, getting it when we have a wide profile, you have to pay attention to the top of the mountain. Remember, in these profiles, this is the mode of the profile. This is the most well-traveled area as far as volume goes, volume prints in that profile. So when you have a wide profile, these things become, a lot more important. And if you look back in time, I haven't seen a gold 240 profile this wide since 87. I'm just kidding. For a while. So as you see this, these are places to play defense. On the long side, I'm definitely not looking at gold in any other way than blocking out the short side. So what do you do with it now? You don't have a lot to hang on to here right now and play defense against, because that POC is kind of, good ways away from us right now. But the good news is you've got the similar formation that we just looked at, on the notes. The S&Ps have just done a moonshot here, and you're going to have new profiles appear tomorrow. So this might be a little bit wait a day type scenario, just like we looked at another instrument a while ago. All right, here we go. So gold's kind of a wait and see in my opinion, but again, you're not looking at this as it's gone too high. Crude, this really disturbed me. You've got a big POC on the weekly here. Not a terribly large wide profile, but again, I think the S&P. Let me just back up for a second. Hold on. Here's the daily on crude. Let's just get a full view here. You've got support that it broke back into at around 47, 70, 71, somewhere in there. We could retrace back into that area. That would be kind of exploring the fair auction on the downside on the daily. I think you don't have a ton of leverage here on crude right now. Getting back down below the top of the mountain on the weekly is going to be important. And put a gun to my head, I'm thinking crude's going to relax back down into 47.70. But again, put your stops in on stuff like that. Going to have some grain volatility today. Here's the situation on beans. The big inflection points, pay attention to 1148 up top. And guess what that coincides with? And I'm going to pull up our scanner really quick and go to our futures section. Here we go. Here's beans, and let's take a look at the landscape view here. See that 1149? There's 1148. So you got a pretty serious lid up top on the weekly and the daily around 1148, 1149 on the bean trade. This is the new crop November. Keep that in mind. You've got support down here. This is the real-time level of the market right now. You got support down here at 1095. So that big whole number, $11 a bushel, 1095, big support there, 1148.49 up top. I know that's a massive range, but I think, with the volatility that's probably going to happen, you've got to just kind of wait and see on those inflection points. There's the 1195, and there's the 1149. Let's see what's going on here. All right. Okay, let's hit the dollar really quick. Still a big fan of this thing bouncing. Here's the daily coming right back down into, you can't see it on the daily. You got a profile appearing below price action today. As we all know, that is very bullish, all right? So as we look at that and as we look at the weekly here coming back down into this general area around 95.76, we're trading 95.78 right now. In my opinion, you want to be looking at the dollar being bid for around this general area. We pierced it a little bit this morning, but nothing more than really noise around that inflection point. If you guys have any questions on that one, please throw them in the den. Let's take a look at the NASDAQ really quick. We didn't hit this recently. We've kind of poked our head above our weekly unfair low here. I don't know if that's going to hold. We could have a little bit I think consolidation or move south on the S&Ps probably is in order at this stage. We've got some resistance finally on both these products, and we're in the DMZ on the Nasdaq between 43.39 and 43.63. The DAX. Here's the situation on the DAX on the daily. Not a lot of leverage here. We've already revisited where we broke up into the profile and came back. We've already touched that. I don't see any real, long or short leverage right now on the DAX. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Looking at the XLU right now, and the notes have kind of bounced off support here. Thirst for yield. Looks like we got some prints this morning, 51.39 already. So, again, I don't think this type of hedge in your portfolio should be dismantled at all yet. So, again, looking at the notes and what they're doing, thirst for yield situation. Let's take a look at the XLF. This is kind of what we wanted to see on this one. is to have this thing get back to somewhere where we could sell it again. Here's the 2257 pre-market prints right now, but we reached a high, got right back up into the bottom of the profile. 2249. If you're looking for some day trades, that whole sector, in my opinion, is going to go back and revisit 22 and even lower. Let's take a look at a couple of the stocks. Let's just go into the scanner really quick. There's JP Morgan. Very eerily similar chart on JP Morgan, going back up into the daily unfair lows around 61.36. Got some resistance here, folks, on the sector and JP Morgan. Let's take a look at the scanner. Let's go right into the XLF. There's the utilities. This is daily breadth calculations. XLF still breadth negative here. We looked at Goldman Sachs yesterday afternoon. If you see what's going on here, not a terrible large amount of green shoots here on the daily. We've had some retracements, obviously, on the short term, as a lot of stocks have had on the 60 and the 240. If you go into here and look for breakdowns on the XLF, nothing defined that way. Let's take a look at something here really quick. Let's get back to the XLF, sorry. Here we go. Well, come on. So if I want to see on the daily what's kind of hovering, yeah, nothing. nothing's at the inflection point there. Let's just take a look at below here. So Genworth and Hartford Financial Services Group. Here's one that's kind of interesting, GNW. Ouch. These financials pull back. Oh my God, that's a $2 stock. I apologize. Let's look at Hartford really quick. We don't want to play around with the $2 stock. There's the daily. Here's the weekly. If this thing can get back up into 43, 48, that will be where you play defense. But I think you could kind of play defense above there and allow this thing to come apart a little bit. Come on, scanner. What the heck's going on here? Okay. Let's look at a new box on the weekly. Public storage. Let's just look at PSA. Nah, we're going to pass on that one too. Let's take a look at a couple of the usual suspects here. BAC. All right, so similar situation as the XLF, Bank of America, JP Morgan getting back up into that 1316 area. Again, not really excited about the financials. We've been talking about that for literally months. And going back to the XLF, just to reiterate this is what our daily chart looks like, kind of empathetically moved up with the market here. But I think we've got some headwinds technically ahead of us on that one. We're going to hit Goldman Sachs really quick, then we're going to leave this. All right, so this is the situation on Goldman Sachs. This stock had kind of on a relative weakness situation, even relative weakness to the XLF. I think there's still big problems here. Technically speaking, I'm not looking at volume or anything else here on the time. I'm looking at volume relative to price. And when we look at this, well, question in the den is how do buybacks affect your call on the financials? Well, let me just finish with Goldman Sachs here. So getting back down below 144.84, I'm looking at this to start revisiting lower numbers. It looks like we're printing already 146.40 this morning. So a little bit higher. But the question, how do buybacks affect your call on the financials? Well, these markets, that news is out there, and that factored in the price of the financials and the XLF is what it is this minute. And, the markets are kind of a forecasting tool. And with that news out there and this, XLF sitting right here at resistance right now, I'm still looking at it from the short side. I mean, if there's a bid up based on that, concept, it's just not happening right now. And that's also bearish in my mind, to answer that question. But if you want to call in and talk about that, I'd love to explore that further. All right, taking a look at the euro. This is one I'm super mega bearish on. We've talked about that. I kind of took a different angle on this trade recently and just said, what, I'm not going to look at it anymore. I'm just going to short the thing and buy the calls. And I think this is going to be, and I love the action on a relative scale, what the euro is doing right now. I'm looking at the euro futures right now. Let's go back to the currency for a second. I'm sorry, that's not the euro. Here's the euro. Just to reiterate this is, again, one of the best trades on the books, in my opinion, to get back down below 109 on that one. All right, let's hit Apple really quick. Had some action on this one. So we talked about a trade and bounce on this one around 91.76. It moved up, of course, off of that. Markets dragged it up, but on a relative scale, on a relative weakness scale, I think you can play defense now above 95.12, and this thing could possibly go back and revisit that 91.76 number. I like the risk reward on this one right now. Pre-market, we're trading around, it looks like 94.11 or 94, somewhere in there. Tesla. All right, so yesterday we got, talked about leveraging against 202. We opened up and went back and revisited that. That's a stop relative to what we were talking about. Market just skying. I don't think anything could defend itself against that on the short side. So right now we're just kind of in a wait and see on Tesla. Had some emails about that one. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Taking a look at the scanner, doing a little sort here, just trying to find some things that closed yesterday right on resistance here. Amgen weekly, daily, coming right back up into a big area of overhanging resistance on Amgen. As you can see, these are end of day. Some pre-market activity we're going to show on the 60 and 240s, but again, we're relying on e-signal data, interactive data feed that's going to populate the weekly and daily when the market's open. But this is going to be real time here. This is the level of the market, poking our head a little bit above these inflection points here right now, just slightly. That's not reflected yet in the weekly and daily. These are great. I mean, it's at the end of the day, I always look and see, you know, as in yesterday after the close, kind of looking and seeing what's kind of come up into inflection points here. Gilead Science, again, this is a daily kind of coming back right at those two areas. If you can see that on Gilead, it's kind of a weekly go back into former breakdown, former support, now resistance type attitude on Gilead. A couple other ones here, Nordstrom. Ouch. Ooh. Can you say retail brick and mortar? That's ugly. Could get more ugly. Not, you know, these are things just not participating. Let me just pull up JWN here. Not a care in the world here. Here we go. So again, JWN, you might say, wow, it's on sale. It's basing. Things on their lows go lower, folks, and this thing's not really participating lately in the rally, and you're coming up back into resistance on the weekly and daily, and some folks are thinking, should I get out on this little bounce? I'm sure. A couple other ones here. PX. These are stocks that hadn't really participated that well in the last 2-day long onslaught here. Let's take a look at REGN. Similar situation. Kind of sympathetically rallied back up into a place where you could, these are, this is an expensive stock, 348. Places to play defense against if the market does settle back here. A lot of the stocks that are kind of looking relatively weak on charts might be the ones to, if the market does head higher, these are the ones that might not cooperate. Not calling it a free trade, but a great way to play defense. Western Digital, this is a stock that on the daily, I'm picking this out because this is an interesting setup here. Let me go to the weekly really quick. If I can get that up. Here's one. You're coming up into resistance on the daily. You're back kind of in the profile on the weekly. We could go back and revisit some lower numbers. What are those lower numbers? 36 36. So you got a decent risk reward here. I think my shoulder just went out of socket there. On Western Digital, take a look at something. Let's get rid of this sort here. We're looking at the S&P 500 sorts. Let's see if we got one in this range at all. Yes, cool. There's the ones from Urban Outfitters. In my opinion, we talked about we're kind of at a area of concern right now, this 27 general area. My initial take on this is we may settle back for a day trade on the short side. But if we break above, we might see that 30 area up top. And there's the 30 area right there. 29.84 to be exact. Not real interested in backing the truck up and getting long on this one. But we may have a little pop if we get through there. But I think short term, we're going to have a possible chance to play defense on the short side there. All right, let's do another sort here. Let me see what we're looking at. Now, these are stocks. Let me just do above bottom here. All right, Lamb Research. Let's take a look at this one. All right, so these are stocks that have been in an uptrend, have acted decent lately, coming back and are kind of hovering around daily support. I'm not real interested in trading this one. Let's take that one off the screen. All right, and let's go down to downtrend resistance. So these are stocks that have, been in a downtrend and have kind of popped up recently because the market's elevated. And there's Gilead, like we talked about before, just kind of empathetically rallying up. Let's take a look at this one. Where's the one I was looking at earlier? Time Warner. Let's take a look at this one. So Time Warner, here's the situation on Time Warner. This is one of the ones I really like. We closed below on the weekly. We've rallied back up into that weekly inflection point, 71.94. Kind of showed itself early before we had the massive sell-off. That's the weekly. Here's the daily. And again, you've got 72.58 down into 72, 71.94 is resistance on this on TWX. Great stock to play defense against if you're looking for some shorts that might not rally if the market continues to go north. Celgene, let's take a look at that one. Similar situation here. Bouncing off the bottom of the weekly. Not exactly the ripest, but you've got a chance to short around 99.17 on Celgene. Coca-Cola, let's take a look at this one. Very similar to Time Warner setup. Coca-Cola rallying back up into weekly unfair lows around 44.60. Let's look at UPS. Yeah, I wouldn't be shorting this one. Level 3, let's take a look at this one. Okay, there's the daily, there's the weekly. Now this is, in my opinion, very cool on LVLT. And let's go back and look at our landscape view here. So this one's got a massive lid around 50.63, 50.56, if you can see that. We kind of rallied back up into that. You might have a really good day trade opportunity on this one. And if the market pulls back at all, you should see some, let's pull this up in e-signal right now. Looks like, I don't know if that's a real print up there. So here's the weekly on LVLT. If you can see this, this is a really cool setup right now. There's the weekly, there's the daily. Kind of financials looking, so to speak there. That same type setup. Let's go back into here. That was, so these are just kind of taking this formula here in the scanner and looking for downtrend resistance, stocks that have kind of been in a downtrend but have kind of rallied back up into resistance where you can short them again. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Welcome back to the show, guys. Looking at crude here, ultra day trading situations, you got some 240 support or 48.81, but I think we're going to probably revisit some lower numbers on this. I don't think there's any leverage on the on crude right now. Therefore, we're probably going to rattle around here. I mean, we've got a kind of an unknown situation in the currency world coming up here. That some more shoes may drop. You guys are aware of that. And that economic disturbance on a long-term macro scale, I think, is still possibly in force here with some of the unknowns coming out of Europe. And I fully believe there's going to be some more rhetoric at some point. This doesn't really pertain to crude exactly, but, with other countries and that kind of Trumpish political scene that's kind of starting to get a little bit more legs to it. And some of the other European countries, every country wants to be able to help their citizens, I'm assuming, and being able to revalue their own currency as they see fit, instead of being stuck in kind of a European Union. How many countries are in the European Union? 34? 30-something? Here's crude selling off some more here. Let's take a look at the dollar. Talked about the dollar being in support mode here. That profile appearing below price action on the daily is very bullish in nature. And we're at weekly support right now, so I'm pretty happy about trying to catch the dollar from the long side right now. 10-year, let's just review a couple of things we talked about earlier. Love this trade on the long side, playing defense below 132.11 this time. Shanghai, we're just going to hit it really quick. Nothing new there. Kind of disconnected from all the mayhem. Let's take a look at the 30-year really quick. We're going to look at the 30-year on the continuous contract right now. Similar situation. You got big support around 169, 170. There you go. Gold we've hit. Let's take a look at silver before we get off the show here. Let's take a look at the July contract on silver. Talked about not wanting to be short this thing. Big support, stops below 1806. We've moved higher. What do you do with it now? I don't see any reasons to take this off at all. There's nothing up here. No new profiles, no new variable stops, if you will. With new profiles, you've got a 240 that appeared below price action on the 240. So again, silver's long and strong. I don't see any reason to take the long trade off, and there's been zero reasons to short this lately. Again, the numbers on beans we talked about earlier, 1149, 1148 down into 1095. That's going to be the big numbers there. Got some grain news coming out today. We're going to take a look at the XLE really quick, just give some inflection points on this one. Reached a high yesterday afternoon up into the 68.16. Again, I think crude's going to bounce around a little bit here, more towards the short side than the long side. The XLE could come back, see 66.47 on the XLE. Thanks, guys. It's been great. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.